Hello, welcome. Let's dive into the main session. Okay, so the first session was about the overview. So we look at what this whole course is about. So now let's do the real business. Okay, so first of all, we are looking at the Bystra course setup. Okay, so I'm not going to spend much time on this. Right, so these are the core setup. Right, so we have the SNLC1, SNLC2, QMR, Quasimodo reversal, Quasimodo continuation, and then Quasimodo manipulation. Okay, so these are very important concepts. But before we look at them, we need to understand some foundation. Okay, so I call this the foundational requirement. There are certain things that you have to know because even when reading them, I mentioned Quasimodo. What is Quasimodo? Okay, so I'm going to look at Quasimodo at its simplest form, right? We're also going to talk about the engulfing patterns. Okay, so we look at certain engulfing patterns and how we are going to link them to the Quasimodo, right? And then next we look at a strong resistance or a strong support. And then we are going to look at the drop-based drop, rally-based rally, rally-based drop, and drop-based rally, and then the hidden base. Okay, so these are some of the foundations. So this session is going to be about 1 and 2 Quasimodo, and then the engulfing patterns. Okay, all right. So the Quasimodo pattern, okay, is what we smart money traders collectively call BMS and RTO. Okay, so there's a break in market structure and then there's a return to origin, right? So we call it BMS, but supply and demand call it Quasimodo, right? Okay, so this is that is in an uptrend. Okay, the market creates series of higher highs and higher lows. So if you watch the videos on market structure, you understand this. Then an normally occurs when it creates what? A lower low. So if you're in an uptrend, the market will be creating higher highs and higher lows. Okay, so higher high, higher low, higher highs, higher low like this. Okay, so an anomaly occurs when it creates a lower low. So here, instead of creating a new high, we had a lower low. All right. So this anomaly is what we call BMS because, right, the market has broken structure. You can see, sorry. Okay, so you have a break of market structure somewhere here. So this is the anomaly. Okay, because normally price is supposed to hold here and then continue up, right? So that is what we call the BMS, right? And so it is called Quasimodo, right? So Quasimodo is not just the BMS, it is the collection, the BMS and the RTO. Okay. So after the BMS, the market pulls back to its origin. This process is what is referred to as what? Quasimodo. For this pattern to be created in an uptrend, okay, there should be a high. Okay, we have a high. Okay, a low, a higher high, and then a lower low. Okay, so we need to have this for us to have what? A Quasimodo. Okay, and for a bearish market, we are going down, so we have a low, okay, a high, a lower low, and the anomaly, which is a higher high. Okay, so we are seeing the QML itself is a manipulation. Okay, so it induces traders, okay, to who are buying support and resistance, okay, to enter positions. So for instance, we are selling, right? Okay, so some people, this is the support, right? Some people buy here, the market to trade below it, okay, to break a resistance. Okay, people buy a breakout and then to come in. So all the process and that process is manipulation. Okay, but just understand it as what? A break in market structure in its simplest form. Okay, so in the next few sessions, we are going to look at this one. When you're looking at the Bystra setup, we're going to look at it well and what are the confirmation. Okay, so the whole goal is what? Understanding what a good break in market structure is and a bad break in market structure is. Okay, so now we go to the second one, which is the engulfing pattern. Okay, so here I have I've listed 3 engulfing patterns. Okay, so this is what Manso Sapari uses. Okay, so you have these 3 engulfing patterns, and doing my own research on the engulfing patterns, okay, I saw some things that are very crucial, that are very important. Okay, so that is what we are going to look at when we are talking about the engulfing pattern. So we have this first engulfing pattern. Okay, first engulfing pattern where price has engulfed the entire bullish candle. So this is a bearish engulfing. You have closed below the wick, okay, and this wick also traded above this particular wick. So we have a full engulfing, right? The second type is the situation where we have 2 bearish or 2 bullish candles, okay, but it's an engulfing because this wick has been engulfed. Okay, the whole body is found within this. Okay, this is uncommon. We actually usually if not for supply and demand or from Manso Sapari, I wouldn't have heard of this particular type of engulfing, but you see how important it is. Then we have this engulfing where we have one bullish and one bearish candle being engulfed by this. And we know that this, when we have this kind of pattern, then it means that price is ranging. Okay, this is within what boundary, okay, on a lower time frame, right? So now price pushes above it, trades above the liquidity, and then comes down like this. So this is what we have represented here. Okay. All right, so we have these 3 patterns, and so let's see how important these patterns are. Okay, so for instance, so the type 1, we are having a bullish candle. This is a bearish engulfing, a bullish engulfing. Okay, but the interesting thing is this. Sorry. With this particular engulfing, let's explain this bullish, bearish engulfing. Okay, so we see market opening here, right? And then trace down to create this particular wick. Then it trades to this level, okay, to create a what? Upper wick. Sorry, to create an upper wick here. So we have the upper wick. Then the market closes where? Closes at this level. Okay, so we have this pattern here. Now, the next candle opens, okay, and trades above the wick of the previous candle, right? Comes down here, forms a lower wick, right, and closes here. Okay, so this is what this means. Okay, this is what this means. But the interesting thing about this is that we have a high, you have a low, you have a higher high, okay, and a lower low. And this is the Quasimodo level. You have a Quasimodo pattern within this. You can see that here. So this makes this entire engulfing an important one. Okay, right. So now, for instance, this is an example. You have a bearish engulfing. Okay, so meaning the price traded below this and created this engulfing. Now, price was coming back. It came back in here and then give us a drop. Now, let's look at it critically. Here, okay, so we have okay, so you have a high, a low, a higher high, and a lower low. So you can see we broke structure here, right? So now market came back to the QM level and fell. Okay. Okay, so that is it. This Quasimodo, this engulfing gave us this pattern. Okay, it gave us this pattern. This is a higher time frame. Okay, this is a daily chart. I think this should be a 1 hour chart. Okay, so yes, on a daily we have this engulfing. On a 1 hour chart, this is what it translated into. Okay, so price traded into it here, and then give us this drop. Okay. Okay, so the second pattern is this, where the situation where we have two bearish candles and what, or two bullish candles. Okay, so what happens? Okay, so we see that, yes, this is a bearish candle. It opened here at this level, went up, created what? The upper wick at this level, came down here, okay, and closed here. So we have this pattern, it closed here. Okay, now the second candle, okay, the second candle opened at that same level, went above the previous wick, right? Then dropped to this level and then closed here. Okay, so at that same instant, we have a high, a low, and a higher high. So we have a Quasimodo level here. Okay, so we have a Quasimodo level. So this engulfing has a direct relation with what? The engulf, with the Quasimodo pattern. Okay. Okay, so this is an example. This is a higher time frame. This is a higher time frame here. So you have the engulfing pattern here, right? You can see that the market engulfed all these candles here, right? But here is what you are looking for. This is the pattern. Okay. So on a lower time frame, so you have this, right? So you have a low, a high, a lower low, and a higher high here. Okay, so you have engulf and the Quasimodo pattern. Okay, so now market came back in, as you can see here. So right, it came back in here, and then boom. Okay, all right. So this is a situation where you have liquidity above it. Okay, so it's the same thing. Okay, so this first candle opened here is a sell candle, a bearish candle. So we opened here, we went up to form the upper wick. Okay, then we came down and closed here. Okay, the second candle, which is a bullish candle, opened here and created a lower wick, then went up and created what? The upper wick, right? Then the third candle, okay, which is a engulfing candle, okay, pushed up, took liquidity, and then came to close down here. Okay, so as you can see, even though we have double top here, right, we still have the Quasimodo at that same level. Okay, did I give some examples? Okay, I didn't give some examples. Okay, so this is where we are going to end this particular session. Okay, so now the question is that with this information, can you create a relationship between the Quasimodo, okay, and the engulfing candle? Okay, so you have to try this. Go to the chart, look for engulfing patterns. Okay, look for engulfing patterns, and then okay, with the engulfing pattern, go to a lower time frame. Go to a time frame that is lower than the time frame on which you found the engulfing pattern, and then see if you're going to find a Quasimodo. Okay, then you can share that chat with me on the link in the description. Okay, I'll put my Telegram link there. You share the chat and I'll respond, and then you have a conversation, and maybe I will explain things that you couldn't understand. You can ask any question there, right? So you are going to look for engulfing patterns on the chart, maybe on the daily chart or on the 1 hour chart. Then you go to a lower time frame, a time frame lower than the time frame on which you found the engulfing, and see if you're going to find the Quasimodo pattern. Okay, and then see how price reacted to that. Thank you very much.